So I was studying for medical school, and I found the Bitcoin white paper. And within, I don't know, a few months, I dropped out of my path to to becoming a surgeon. Like at the time when we were thinking about raising for QuickSwap, if I would have had someone more aggressive on the money side next to me, who was like, no, Roc, we got to take this fucking money. This is probably my biggest growth hack, personal growth hack in the world, is listen to podcasts or audiobooks 24/7. Like if I'm not on an interview like this, and like just learn. Like, so I think, when Lunar Digital Assets, which I'm the CEO of now, but I wasn't at the time, it was just being started, when the other founders came to me and said, we don't know what you're gonna do at LDA. Frankly, we don't know what we're gonna do. We just want to build a crypto company. And they said, but we need you. We want you to join. It was just because I had more knowledge than everyone around me, and because I had been spending out 10, 12, 16 hours a day studying crypto and Web3 and just learning everything about it.
Hey everyone, it's Lily Dowse here, and this is BrandTalk. This is brought to you by CoinGape, where we track the happenings of emerging Web3 technology. So super excited for this interview. In this episode, we are sitting down with Roc Zacharias, the visionary founder behind QuickSwap, amongst other things. So I'm really excited to take a deep dive into this one. And QuickSwap is one of the earliest and fastest layer 2 DEX built on Polygon. So Roc is here to share his incredible journey into Web3, behind the scenes of launching QuickSwap, and how he navigated early investor conversations, the growing pains of Web3 innovation and DeFi, and where he sees the most explosive opportunities in the next evolution of decentralized finance. So much going on in this episode. So I'm going to be welcoming to this amazing interview, Roc. So here we go. Roc Zacharias, why don't you give us a little bit of description about yourself? Because I'm sure everyone at home is dying to know about who you are and why you decided to create QuickSwap.
So I'm Roc Zacharias. I'm the co-founder of QuickSwap. It was the first layer 2 DEX in the world to reach $1 billion a day in volume. We were kind of the thing that helped Matic at the time, and now Polygon, really get its big early growth. So we were the first application to 1 million in TVL, and then the first application to $1 billion a day in volume. And let's see. So I serve on the board for Polygon's grant program. That's $1 billion fund that we use to help build out the Polygon ecosystem and Ethereum. Projects that are good for Polygon, good for Ethereum, good for decentralization is what we're focused on there. I'm also the CEO of Lunar Digital Assets, a venture studio that it's a venture studio and incubation and marketing firm hybrid, because we work on projects at different stages. But we incubated projects like Polygon, QuickSwap, Dogechain, Persistence, Chromia, a lot of others over the last almost decade now in the space. I'm also a mentor for Tim Draper's Bitcoin Fi Accelerator, which is focused on projects building on Bitcoin. So these are Bitcoin layer 2s, Bitcoin DeFi, Bitcoin social fi, stuff in the ordinals and runes space. And then I'm also a city leader for BitAngels, which is an investor pitch network. So we have cities around the world, I think maybe 30 cities at this time, in Dubai, Los Angeles, Bangkok, all the major cities where conferences are essentially. So that's a little about me.
Wow, that is a lot going on. I'm really lucky to find time with you actually to do this interview when you have so much happening. But let's take a little step backwards and then build to where we are now and where you're going in the future as well. So let's take us back and kind of understand what first pulled you into crypto and led you ultimately to being the founder of QuickSwap and doing everything amazing in the space that you're doing?
So I was studying for medical school, and I found the Bitcoin white paper. And within, I don't know, a few months, I dropped out of my path to to becoming a surgeon and went all in on Bitcoin. At the time, I was a Bitcoin maxi. Hence, I still wear my Bitcoin lapel pin. But over time, I realized that Bitcoin wasn't the only thing out there. That it was, so I coined the phrase around 7 years ago, Bitcoin maximalish. So I'm not a maximalist. I think there are other really interesting things, and we should be, innovating and trying to compete and build all kinds of new things for humanity. But that Bitcoin is the king, and it is the one thing that I think has the highest chance of becoming a world reserve currency. I think that is the inevitable path for Bitcoin. I think Ethereum, Polygon, QuickSwap, and Uniswap, Aave, all these things are really interesting, but I think that they don't compete as money with Bitcoin. So I met Sandeep from Polygon at a hackathon for one of our clients, Chromia, which were the team that actually built Colored Coin, the original kind of like trying to do what Ethereum did on Bitcoin a long time ago. Vitalik was involved in it, and then it just didn't work out, Colored Coins, and Vitalik went and did Ethereum. But anyways, I was at a hackathon with that team, and Sandeep was there, from the founder of Polygon, and this was when they were still Matic. They didn't have a test net. They were just a small team of a handful of people, mostly just a concept at the time. And I talked to him for hours, and I was enthralled by the things he was saying they could do to scale Ethereum. And we ended up incubating them. And then maybe a year and a half later, Sandeep came to me and said, "Hey, you guys are the best at BD, the best at marketing, community building. Do you think you could build a DEX?" And I said, "I don't know. I've never built a DEX." He said, "I'll give you the best devs I know, but you guys do all the BD, the marketing, the business side, grow the community." And I said, "Well, we'll try." I didn't, to be honest, I didn't have high hopes. I didn't know, the first thing about a DEX. I was interested in DeFi, but DeFi wasn't really that big yet. This was like 5 years ago.
Mm-hmm.
And so DeFi was starting. There were some products that were starting to take off, but I said, let's try. And we gave basically all the tokens to the community. We gave 97% of the supply to the community.
Wow.
I, as a founder, didn't take any tokens. I turned it down for spilled my water, for two reasons. One, because I thought it would be more decentralized, but also at the time I was living in California and I was scared of regulations. There was a lot of, regulatory talk at the time. So I said, I'm just not going to take any tokens. And for the same reason, a bit later when we were getting a lot of traction, QuickSwap had gone up. I mean, it peaked at like a 2000x from its early days. And we had Sequoia and Coinbase Ventures and Lightspeed all wanting to invest, Mark Cuban. And we decided not to take the investments. So it was, they wanted to invest, like, I won't name which ones, but like one of them said they wanted a minimum of 20 million to do the deal. And so in total, we were looking at anywhere from 30, 50 million, whatever. But we turned it down because we wanted to stay decentralized. And also, again, I was scared of regulation. And I thought, if we take investment, does that make us some kind of security or something? So instead, we just gave everything to the community. We gave all the tokens to the community. And I think that was some of the magic that made QuickSwap have so much success. They knew there weren't any VCs to dump on them, kind of.
Yeah, and that's very unique now as well. Was there ever a moment where you kind of thought, damn, I wish I would have taken a token allocation, when you're talking about things like 2000 Xing?
Yeah.
Random question. But...
Sure. Yeah. I mean, or taking the investment, because I think less than like me taking tokens as a founder, taking the money as an investment, I think could have been good because it would have given us more runway. We could have, hired more devs and built even more innovative things. Now, I think with not taking investment and giving all the tokens to the community, we built some really innovative stuff that DEXs around the world have copied. We've built a lot of the industry standards. We have, some pretty amazing team members, and we work with a lot of teams, other dev teams. So where we lacked a large treasury to be able to hire, 1 million all-star devs, we would partner with other teams that we thought were promising, and we would do revenue shares and things like that. So as an example, let's see, where's a good start? Algebra was a technology provider and had built a unique style of a DEX, but they were trying to be a DEX at first. And so we saw their technology. We thought it was really interesting. It had elements of Uniswap's V3, which at the time was licensed, so you couldn't fork it. And it had other things like dynamic fees, which now Uniswap V4 is implementing. So they had that before Uniswap. And so we thought they were really interesting. And so we went to them and we met up with them a couple of times in Dubai, and we were able to strike a deal that we would give them a split of revenue. We would license their technology. And our thing to them was, if we use your technology, other people are going to want to use it too, because we're a big name. And we were right after we used them, because at the time, their DEX only had like 1 million in TVL. And so they were, not failing, but it's really hard. The DEX market is not easy to break into. People don't trust your new code if you don't have a big name behind you. And so they had the code, we had the name. And so when we partnered together, and within the first, 6 months, we had like 50 million in TVL on their, on their tech, essentially on QuickSwap, all kinds of other DEXs started wanting to use our product. And today it's probably 30, 40, 50 DEXs that use that technology. So they pivoted from being a DEX to a technology provider. And they also now have built their V4, which has also similarities to Uniswap's V4 and some other differences. And now a lot of DEXs are using that, including, I think, Camelot and a bunch of big DEXs, us, on multiple chains. So anyways, we call that like the QuickSwap effect, where when we build stuff or invent new standards or partner with teams to make new standards, everybody else ends up copying them and they become industry standards. So there's a bunch of other examples of that. One is, so there are these things called ALMs, automated liquidity managers. And these are essentially when the world went to V3 DEXs, concentrated liquidity, it became very hard for users to manage their liquidity. So what the industry invented to deal with that, because in a V2, it's an infinite range. It's 0 to infinity. You just put your money in, your ETH, your USD, your ETH, your Bitcoin, whatever pair, and it is automatically, it's a curve that goes from 0 to infinity. And so when V3 came out, you have to select ranges, you have to rebalance. It's very complicated. And so these ALMs, or automated liquidity managers, came out that can manage your funds for you while not taking custody of your funds. And so at the time, there was only one that had any popularity. It was Arrakis, which was on Uniswap, which got a lot of traction. They got up to a couple billion in TVL, but their model wasn't good. It was too aggressive. It had high, basically what they were doing is they were making, I don't want to get too into the weeds, but they were making really tight ranges that were risky and resulted in permanent loss. So when you saw all these papers coming out about most Uniswap positions, like 53% of Uniswap positions were in the negative with impermanent loss, it was partially because of things like this. They were too aggressive. The ranges were too tight. It only worked when they were getting lots of liquidity mining rewards, like when they came to Polygon and Polygon gave Uniswap a grant. Uniswap gave it to Arrakis. Arrakis gave it to the community. And it worked for a while. Then once the liquidity mining dried up, it just died off. And so we wanted to do it a different way. So we found this team, Gamma, and we liked what they were building, similar to Algebra. And we told them, hey, we like what you're building, but there's some tweaks we think you need to do to make this future-proof and sustainable. And so we worked together. We built the product that they use now today that's been iterated on a bunch of times now, but now the whole industry is using that. Again, there's 50 DEXs that use that. Then more ALMs started coming out, like Ichi, Steer, a bunch of these different ones. And we wanted to let them compete against each other, but there was no way to distribute the rewards. So we, Alexi from our team, one of the big brains at QuickSwap, is our product lead. He said, maybe we can use this other technology that this team, this Angle team had come up with, and we can tell them to build it in a new way that we could use it to distribute rewards to multiple of these ALMs in a pro rata way based on their performance. Because at the time we would have to like give some to this guy, some to this team, some to this team. And we had to manually manage that. And it wasn't really decentralized enough. We weren't letting the free market compete. So we worked with that team and they made this Merkle tree thing where it automatically distributes rewards based on their performance. And now everyone uses that. Everybody uses this. So there's like, I don't know, another 5 examples of this, of things we've invented or built that every like DEX in the world uses, except for some of them Uniswap doesn't. They do things their own way, but all of the not Uniswaps, Pancake, Camelot, Aerodrome, they all use a lot of this stuff. And even Uniswap has started to use some of it. So the Gamma thing, we built up Gamma. They, just like Algebra, they only had 1 million in TVL when they started. Now they have, I don't know, hundreds of millions across 30 chains and DEXs. And then it came full circle when Uniswap gave them 2 grants. They gave them a grant for, I think, 2 million on Arbitrum and a grant for 1 million on Optimism, and to build what they built for us. So pretty cool to see Uniswap, copying us after us being birthed from copying Uniswap.
Wow, so you really were and are pioneers in this particular part of the space of DEXs, which is pretty incredible because things have changed so much since even when you founded QuickSwap. But it's keeping yourself being flexible enough to move with the times. As you say, a lot of like collaboration, working with different companies. So kind of how did that path look like where you stayed so adaptable when you really kept on top of everything?
Well, this industry is always moving, so you have to be nimble. You have to be ready to change. And there are no projects hardly in the entire industry that haven't pivoted or changed or rebranded or, evolved over time, other than Bitcoin. Bitcoin's the only one that doesn't change because it doesn't need to, in my opinion. It has minor changes here and there, but that's another topic. So we recognize the need to change. And sometimes it's pressure. Sometimes it's, our TVL's dropping and someone else is going up. What are they doing? We got to invent something new and innovative because like any technology, it's a constant arms race, right? To make it be more efficient, to be more capital efficient, to be more secure, to fight the hackers, to get more eyes and market share. So it's like any business, really. You have to be constantly adapting, but in crypto, it moves faster.
Wow. Yeah, no, that's so true. And looking kind of overall, so let's skip back a little bit to the investor backing that you mentioned. Obviously, you are one of the few top DEXs that bootstrapped without VC capital. But for those that are considering like raising money, what do you think would be your best advice for some of these projects? And did you think you learned lessons by, as you mentioned earlier, by not involving VCs? Or ultimately, do you think if someone's doing it now, it would be better to take that investment?
Yeah, so not only did we not take the VC money, we took no public money. So we didn't take $1 from anyone. We didn't have a public sale. We didn't have an ICO. We didn't take any VC funds, no private rounds, nothing. I think it was cool. It was a really fun experiment. If I could go back, I probably would have taken the money just because of the reasons I mentioned earlier. We could have built bigger, badder things. And, there's a reason that in the world, VCs exist and that that's kind of the model for, tech is, get early investment, use that to grow really fast, get another round of investment, grow really fast. Don't worry about profit so much. And in Web3, we're not companies necessarily, and we're decentralized, but there still are, analogs. but yeah, so I mean, I work in a lot of investment stuff now with, Bid Angels, the Pitch Network. I mean, that's what we do. We link up projects with investors. We have projects pitch in cities around the world. So in Dubai, we have coming up, we'll have a bunch of pitches there. Actually, I think applications are still open for that if this airs soon enough. So go to bidangels.network and you can apply to pitch in front of angel investors. There'll be a bunch of big people there. Some of the biggest investors in the industry will be at this one. One celebrity will be on a panel that we can't, his team told us not to say, but for now, I can say Michael Turpin will be there. He's the creator of Bid Angels. He invested, Bid Angels invested in Ethereum ICO. He did the PR for Ethereum ICO and for Tether launch. And they did token sale management for the first ever ICO, Mastercoin. And so, I work closely with him. He's a legend in the industry. Actually, here, I'm going to plug his book for him. I'm using it right now. I moved my setup. I was using it as a mouse pad thing, but here's the Bitcoin Super Cycle by Michael Turpin. Check it out. Great book.
It's always with you, no matter where it is. It's there. I mean, no matter, what more could you want than having it, but also reading it as well. I know Michael as well, and absolutely nice. Incredible person. And I really agree. I think people that are looking for finding the right VCs for them, it's great to do things like going to pitch competitions and, just getting out there at these events and meeting people. What would be your best advice for companies in those early stages in terms of how they pitch their project, where they go to meet the right VCs, and how to identify actually the right VC? Because I think that is also very important in Web3.
So, okay, how to find VCs, that's hard. I mean, it depends who you are, right? What doors do you have open and who do you know? It's difficult. I would suggest, going to conferences. If you're newer to the industry, go to as many conferences as you can. That helped me to break in, 10 years ago. Get to know some people in person. Those relationships, a lot of them can last. Bid Angels is incredible. It's the best investor pitch project. It's the best place I've found to interface investors with projects. The investors that come are very accessible. Oftentimes they're judges. So, when the pitches are happening, there'll be judges, and those judges usually can write checks or grants. So go to Bid Angels. There's one once or twice a month. In cities around the world. I mean, I think a couple of weeks ago we had 2 in the same day in different cities, one in Vegas and one in, I think, Austin or Houston, somewhere in Texas. But that's a good one. I guess this is an indirect kind of piece of advice that relates, but I have this thing. I stole it from Jeff Bezos, or I'll credit him. It's that I was watching an interview of his once, and he said that when Amazon is acquiring companies, he said they acquire 100 companies a year. And when they're acquiring these companies, he tries to interview the CEOs, and he tries to one of the things he tries to figure out is, are they a missionary or a mercenary? Missionaries are often quirky. They are, they want to change the world. They want to change their industry. They're less money focused. They still should be money focused if they're building a business, but they're less money focused. And they are passionate, right? And mercenaries are more business minded. They're maybe thinking, okay, how am I going to build this company? What's my exit? They're more strategic. They're ready to sell the company and move on to their next thing. And he says the great paradox is that the missionaries usually make more money in the end than the missionaries make more money in the end than the mercenaries. Yeah. Which I thought was really interesting. And I've always kind of felt that inside of me. And after hearing that, it kind of has always stuck in my mind. And so with me as a founder, not taking any tokens from QuickSwap. Now I ended up getting 0.25% of the quick supply by working for LDA. Now LDA, I'm the CEO of, and LDA did take 1% so we can have a big team working on the marketing and the BD and all that. And over 5 years, by working for LDA, I asked for some of my pay to be in Quick Token. I got like 0.25%, which is, is not a lot of money. But that I've never sold any. Actually, I've bought many multiples of that with my own money. I've bought a Quick just on the open market. But anyway, so yeah, the missionary mercenary thing, it really works for me. It stands out for me. I think there's a reason, for example, Polygon asked me to serve on the board for the grants program, because you need someone there you can trust, someone that's not going to be corrupt, someone that's going to do the right thing for the community. And that's why Michael Turpin has asked me to be a big part of Bit Angels, and Tim Draper wanted me to be a mentor for his Bitcoin Fi Accelerator, is because I do the right thing. And I like money. I care about money, but it's not my, number one goal. Like, I'm the only person at QuickSwap who's never taken $1. My team gets paid, but I've never taken $1. In our first year, we generated 100 million in revenue. I never took $1 from QuickSwap Foundation, even though I have the capability to take, a good pay from that. I don't. And I never sold a Quick token. So anyways, but like, those things build me kind of social capital. They build me my reputation. People believe in me. They trust me. And that gives you a lot of ability to do really cool things, to build great things, to have good backers, people that see, oh, wow, he never sold the tokens there. So Mario Nafal's company recently, they asked me, to invest in an early round and these kind of things. And one of the things they told me is, one of the reasons we're giving you a big allocation in this is because we know you're not like a seller. You'll hold the token. And so, that's been me with almost every project I've ever been involved in. I just hold the tokens forever. My Bitcoin, I'm still holding from 2015 and buying more. I buy or work on things I believe in, and then I hold them forever. And it's just like points on a database, I guess, for me. I don't live a lavish life. I don't know. I like building in the space.
It's probably the best way to do it as a founder, though. It's not kind of over accelerating yourself and kind of sticking to your guns of why you got into the space, what you want to achieve. And I think that's really a great way of saying it, is kind of, as a founder, decide exactly how do you operate. And then I think that kind of advice then goes into, how you operate with VCs and the whole ecosystem in general, because it really, how you are as a person will impact how you operate your business as well.
Yeah. I guess an advice for people out there would be, this has worked really well for me. I think I've been like maybe too extreme on these ends though. And I think there is probably a better balance to be had by founders. Like, you have to be thinking about making money. I do. Obviously, we have a bunch of companies and portfolio companies, and they have to be profitable. So I do think like that, but like, my team always yells at me like, Roc, why are you like not taking pay from any of these things? And I often turn down money and just say, no, we'll just do it just to help you guys out or stuff like that. And I think maybe there's a better balance, but I don't know. I just kind of have been like this, and I enjoy that. I don't know. It's good sometimes with like some of our portfolio companies. It's good that there's like a check and balance of, there's me who's always saying, let's not sell any tokens because it's bad for the community. And then there's other people on the team who are like, no, we're fucking selling tokens. And to be honest, I think that's been good for me to have a balance of like other people in the, groups and founders that can be a little more aggressive about trying to make money, and then me trying to hold them back and do the kind of the more, I don't know, I don't want to say like ethical, but the more long-term thinking and more community focused thing.
Mm-hmm. And that's definitely also down to, as a founder, who the team you build around you, who you choose to work with, really is so important. Because as you say, even if your mindset is a certain way, you kind of might need that balance to ensure that your business is fully operational and that everything else is working perfectly while you still maintain your core values.
And then think about, just really quick, sorry to interrupt, but if we had, like at the time when we were thinking about raising for QuickSwap, if I would have had someone more aggressive on the money side next to me, who was like, no, Roc, we got to take this fucking money, we might have been in a different place, building bigger stuff. I mean, we made it work, and we've done an incredible job with QuickSwap. We're one of the only DEXs in the world where Uniswap is on the chain that we're on, that we are still number one. It's only us and Base, I think. Every other chain where there's like, a DEX and then Uniswap ends up crushing the native DEX. But there's like 2, maybe 3 chains in the world where they haven't done that. And Uniswap actually in their governance proposals has talked about this, that QuickSwap is a good place to do A/B tests because they haven't crushed us yet. So they could do tests like Polygon was where they did their, I believe it was their front end fee test where they turned on the fee to use the front end. And I think, if I remember correctly, it was either that one or another one, but they started that on Polygon because they said, we actually have competition there with QuickSwap. And wow. So let's launch this test there and see if we start to lose market share if we turn on this this fee, or maybe it was turning on a fee split to taking a fee split from the LPs. It was one of those. But anyways, yeah, it was cool to see them reference us. Actually, we've been referenced on the Uniswap governance forums many times as an example or a comparison or thing. So that's flattering for us.
You're the gold standard for certain operations in the space. And then let's also talk a bit about some of the difficulties, because obviously it's great to concentrate on the positives and all the amazing things that you guys have obviously achieved. But what were some of the obstacles along the way? Obviously you were scaling in a new ecosystem like Polygon. What were some of the hard challenges that you faced, and how did you overcome them?
I mean, it's a challenge every week. But yeah, that's actually a fun positive challenge that you kind of bring up there, which was when QuickSwap was really first taking off, none of the infra in the industry could handle what we were doing. So Ethereum had, 13-second blocks, and then Polygon came with their, 1-second blocks. And once we started getting a lot of transactions, we had more transactions at one point, more transactions per day than every application on Ethereum combined. So 50,000 applications on Ethereum, Aave, Uniswap, OpenSea, Curve, everything on Ethereum combined. QuickSwap on Polygon had more transactions a day and more daily users. And so that put a lot of stress on Polygon, the blockchain, which never skipped a beat. But it was not the blockchain, it was the infra around it, the RPCs, the subgraphs, all of the, we used the graph at the time. They couldn't keep up, and we kept having to resync it. And so we had to go to other providers and tell them, can you build us something that can handle this load? And we had to start splitting the load between, I think like the graph and others, and all the different RPC providers. Actually, Anchor, who are good friends of ours, we actually incubated Dogechain, the biggest Doge L2, and the dev team behind it was led by the CTO and CEO of Anchor, Ryan Fang and Chandler Song. And they were instrumental actually in the early days of Polygon for building out RPCs. What they built was an RPC aggregator. What it would do is, instead of having to choose an aggregator, and if that aggregator got full, you had to manually go put a different RPC in. They made an aggregator where you put in their aggregator address on MetaMask, and then it'll automatically load balance. So when one RPC is getting full, it'll switch you over to another RPC. And that was an industry first that now all chains use. But that was those were the kind of things that had to be invented to keep up with the load that we were producing.
Wow. Okay. Yeah. So there's always going to be challenges. I think, like you say, on a weekly basis, on a daily basis, this industry is constantly changing. How do you think that, Roc, for you, Web3 businesses differ so much from other businesses on the market? And how is there a way to kind of decide if moving into Web3 is right for you as a founder, and if you have what it takes to go on this journey? Because it sounds like there is a lot of moving parts and there's always lots of challenges.
Well, the most obvious challenge, I think, is the ups and downs of the market. When you build your project, company, whatever it might be, you have to plan for really hard times. this bear market we're in right now has been going on for what, 3 years, and people thought it would have been tapering off. I thought we should have started seeing some upside around the halving last year, depending how you say it. So that was in April of last year. We're in April of 2025, and altcoins have not seen any reprieve. So you have to not only plan kind of for these cycles, but even the cycles might not always last, right? So you need to have enough you need to be lean enough and have enough runway to build for a long time, which, markets are, they can deal with negative kind of externalities if they're predictable. What markets don't like and businesses don't like is uncertainty. And so our industry has a lot of uncertainty. We have our own internal uncertainty, and then we are also kind of whipped around by the global markets, by these trade wars, by Ukraine war, by Israel war, by COVID, by 2008, all these we weren't there yet, but all of these kind of things have a heavy effect on our industry. We're very kind of capital hungry. We need, we're kind of dependent on loose money, from the Fed and Treasury and global markets. I don't think it'll always be like that, and we're finding a way to kind of stand on our own two legs as an industry. I thought it was pretty interesting that the presidential election that just happened. I think it's funny that all we had to do to finally be heard by the politicians, all we had to do was really simple. We should have just known this is all we had to do, was we had to donate more money than every other industry combined.
Yeah.
I mean, or about the same, to be technically. It was 48% of all donations. So half of all donations, meaning we donated as much as pharma, military industrial complex, aerospace, farming, agriculture, mining, every industry in the world combined, we had to donate that much, and we finally got a seat at the table. But
wow,
at least we got a seat at the table.
That's a very interesting statistic as well. And do you feel like right now, like the world is performing as you were hoping it would after Trump's election? I mean, we obviously, as you're saying, we funded so much of the election. Do you think there's a lot more that needs to be done in terms of the US and just internationally actually adopting Web3 and crypto?
Well, I think it's been definitely more positive for crypto than the Biden administration and any previous administration, even the previous Trump administration. I mean, he was negative on Bitcoin before, but like most people, when they learn about it, or I guess when they get enough donations, they're forced to learn about it. I mean, his sons are really into it. I spoke on stage at DeFi World in Denver a couple months ago, just before Donald Trump Jr., and I got to ask him a question. And it was about like what the reserve would look like. And he basically gave me an answer of like, I can't tell you, and I'm not in the administration, but it was a pretty interesting answer, some of the stuff he said. But anyways, I think Trump is generally good for crypto, good for Bitcoin. I think that his whole administration is very pro-crypto. New SEC chair is pro-crypto, but we got to be careful on that, because I thought Gary Gensler was going to be pro-crypto because I took his courses at MIT where he taught, crypto, Bitcoin stuff. And you could take those for free online, by the way. Interesting to see how he talked about it then and how he talked about it when he got into office. But so we thought, I was telling my dad and everyone around me, hey, this is going to be great for crypto. Look, we're getting an SEC chair that's going to be pro crypto.
And then it's like, no,
yeah,
not again.
Yeah, he ended up being pro Bitcoin, but not pro crypto, which is interesting for a Bitcoiner like myself. I mean, he kind of unlocked Bitcoin to go farther, as saying, this is a commodity, it's safe. The other things are basically shit coins. In other words, he said, but anyways, it's interesting. I think we'll probably see him go into crypto in the future to some extent. We saw this happen with the previous chair, Jay Clayton. He was considered the sheriff or crypto sheriff or something. He was very negative on crypto. And then, within 6 months of him being out of office, he was on stage with Larry Fink talking about how, stable coins and crypto could be really changing for the world. And, okay, well, you were really talking a lot of shit on us when you were in office, but these people they don't act on their own. It's not actually their job to act on what they believe in. It's their job to act on either what their voters tell them, that's really what it should be, or what the person who put them in place or the other politicians tell them they have to, their mandate.
Yeah, no, that's so true. And of course, we had to digress and discuss Trump and politics. I think it is so important in this space, and probably for founders out there as well. It's understanding the landscape that they're entering into. You also have regulation as well now really coming into play. So for founders that are kind of worried about compliance risk and how to balance that with innovation, what would you suggest is the best ways, Roc, for you that they navigate that?
I mean, that's that's like could be a 10-hour discussion.
As brief as possible.
Yeah. I think be lean is probably the best thing I could recommend. Keep your team lean. Hope for the best, but always plan for the worst in this industry. You don't know what's going to happen. I mean, for all we know, I don't want to scare the audience, but we could go into, another 2 years of bear market. We don't know. We don't know what is in store. I don't think that's going to happen. I'm very bullish on the industry in general. I think the industry is very oddly undervalued with all of the rhetoric globally from the US and other countries about, using Bitcoin as a reserve and BlackRock, ETFs, BlackRock with their BUIDL fund, which is on Polygon and a few other chains. And Franklin Templeton is also on Polygon. They have a fund on Polygon now. Reddit is on Polygon. So there's a lot of good stuff, but I don't know how we are as an industry, like a $3 trillion industry, how that is less than the market cap of NVIDIA and Apple. I think Apple, yeah. It's bizarre to me. I think Bitcoin should be at 20 to 100 trillion. Maybe not just yet at 100 trillion, but eventually I think it'll be at 100 trillion. I think it's much better than bonds. I think it's much better than, it's a better store of value than all of the other stores of value. Right now there's what we call a monetary premium on lots of different assets. So gold can be used in industry, but it's really all of its value comes from its monetary premium. At least 90% of its value comes from monetary premium. If it was not a money instrument or a store of value, then gold would probably be at, a tenth of its value now, because it would just be used in gold teeth and, and also aerospace products and chips and things like that. But most of it is used just to sit in a vault. It's not used for industry. Anyways, so real estate is also used as a monetary instrument. It has a money premium. This is why people can afford to live in homes partially. There's other reasons too, but art has a huge monetary premium. Many people who own big pieces of art aren't even fans of art. They don't give a shit about art. It's a good way to store their value, and it has tax, incentives. So all of these things, bonds, art, real estate, gold, that are used as stores of value, as Bitcoin grows and gets more reliable with Lindy effect, meaning, over time, the longer it's alive, the more likely it'll be alive. Like, that's why people are so, feel so safe with gold, because it's been around 5,000 years and held its value. So I think over time, Bitcoin will absorb a lot of those values. It'll absorb a lot. I think the biggest thing it stands to absorb is the bond markets, which are some of the biggest markets. The bond markets are anywhere from, 300 to 500 trillion for global national bond, sovereign national bonds, and corporate bonds and other bonds. I think crypto absorbs a big percent of that, and that market is growing too. So when we say that, if you believe Bitcoin is as good as gold, or let's say it's twice as good as gold, or 10 times, whatever you believe, then you would say, okay, well, if it's as good as gold, that's a 10x from here. We're at like 2 trillion now, gold is 20 trillion. But you have to realize that gold, its price is a moving goalpost. So when only a few years ago, I was saying, we should be 2 times, 5 times gold was at 10 trillion. And so that gave us, how many X's, whatever it was. It was like, 20, 50X, I don't remember. But anyways, now gold has doubled, and now we're at 2 trillion and gold is at 20 trillion. And we still need to go, multiples of gold probably. over a long enough period. And so my point is, if we think right now humans aren't good at imagining the future, right, in a lot of ways. And so if we think right now that, we should call it 100 trillion of the global bond markets over time. Well, keep in mind, by the time we hit 100 trillion in the global bond markets, they will be a 4 quadrillion market instead of a 400 trillion market. And so they'll have 10x. So that gives Bitcoin another 10x to catch up, right? And this is partially due to inflation. So some of that is fake gains, but a lot of it is kind of real because, the cost of food doesn't generally go up as much as assets go up because of kind of the quintillion effect, and because scarce assets go up more from inflation because rich people know how to put their money into assets to protect them, whereas poor people don't. And so anyways, little tangent there, but I'm bullish.
I can feel that Bitcoin maximalish nature to you right now from talking about Bitcoin. But I think it is always good to reflect back on Bitcoin, and then
there's Cindy in the background. Hi, Cindy.
Hi. And then let's focus kind of on the future as well. So we've taken this deep dive into Bitcoin, but what do you see are the biggest growth potentials in DeFi right now? Where do you really see the opportunity sitting for you, Roc?
I think RWAs are really interesting. There's a lot of people doing stuff with this, BlackRock and others. Polygon is really focused on RWA right now. That's kind of our direction. We're focused on RWA and payments. And so Polygon is I think, second or third right now in stablecoin payments, and we're making a big focus on that. I'm not at, by the way, Polygon Labs. I'm not an employee of Polygon. I serve on the board for the grants program specifically. Mm-hmm. So the grants board, which manages that $1 billion fund, is actually external to Polygon, and we have autonomy over what we do with the funds. And there's reasons for that, decentralization reasons, getting more opinions from a broader audience, kind of group of people opinions, and decentralization regulation and things. But so I'm not from Polygon Labs, just letting people know I'm not speaking on their behalf. But Polygon is focusing from labs and from community and from grants on RWAs and payments. So RWAs are, I think, interestingly, we're seeing some of the biggest growth in the industry and biggest successes in the industry are RWAs. So things like real estate on the blockchain, contracts on the blockchain. So on Polygon, for example, there's a project called Courtyard, and Courtyard takes collectibles, things like Pokemon cards and other collectibles, and they put them, you send them into them, they put it in a Brinks vault, and then they give you a digital copy, an NFT version of your physical Pokemon card after it's graded. And they are doing a massive volume, tens of millions in volume a day of Pokemon cards and these other collectible assets. So it's really interesting to see there's more of these physical assets being traded in the NFT markets on Polygon than there are in the digital NFT, like native markets. It's kind of interesting to see that. I don't think people expected that.
Yeah, I think that's actually really good advice for people out there as well, is even if you take a part of the industry, which say is real world assets, just finding your own little niche as part of that. And it can be as kind of out the box as you want to go, but there's so much ability for that to actually work, like Pokemon cards and things that people might not necessarily straight away go to. But I think that's some of the really exciting parts of the space, is things that people necessarily don't straight away think of, but sometimes there's such a need for that they sometimes the best projects for people to really be the founders of and put their time and effort in.
Yeah. Another area I think is really interesting. So I think bonds on blockchain, which there are a bunch of people trying to do this. I mean, that's kind of so USDC and USDT are in some ways bonds on the blockchain, except for that you don't get the yield natively. Now, USDC, this is going to keep getting pushed, though. The envelope will keep getting pushed. basically there will be competition in stable coins, and what will inevitably happen, as it happens in every industry, is profits will get constricted as competition comes. And the way that will happen, and it's already starting to happen, is USDC and USDT. I think USDT makes more money a year than Goldman Sachs just from the treasury yield. So you use USDT, you give them $1, they give you a little token, and they go take your dollar and buy bonds and get 5% on them or less, because they're buying T-bill, short-term bonds. But so they're getting all these massive yields in the background. You're getting nothing except for the privilege of using this stable coin that can be used in our industry and good for global trade and payment remittances and things like that. But over time, there will be other people that'll go, hey, we're building a stable coin and we'll give you half of the yields of the treasuries. Or, if you stake it, we'll give you the yields. And then you'll basically compete the profits away. And then later on, it'll be the consumer will get most of the yields, I think, at the end. And it'll be just a small amount going to the stablecoin companies, depending on if they can create monopolies around that and moats or not, which they are doing, by the way, with the new stablecoin regulations put forth by the United States. They're basically, like most regulations, unfortunately, that are meant to kind of protect the consumer, they actually protect the biggest companies usually. So they create moats around these companies because only these companies can afford the legal fees to follow the rules like they are. And like one of the moats that they're putting is that you have to hold treasuries. So you can't build more in the current iterations of the bills. Now they will keep changing and we will have new bills, but in the current iterations, I think it's still a win for the industry. They're saying stable coins are not securities and we will allow them if you hold all of your money in US treasuries, essentially. So what they're trying to do is make these stable coins, hijack them as, wrappers of the US dollar and the dollar system, which is good for the US, I think, at least in the short term. Actually, that's good for the US in the long term, but yeah, go ahead.
You've definitely highlighted, I think a lot of things that people need to be thinking about, especially if they are still starting out in Web3 and coming out with their concepts. I think it is really good to follow the trends as much as you can, try and not always do over replication, but stick to some of the framework that's already there, but then put your own unique spin on what you're doing.
I just realized something.
Say it, Roc.
Earlier, I think before we started recording, maybe you mentioned that we had met somewhere.
Yeah.
Did you interview me at DeFi World in either ETH Denver or in Bangkok?
No, but it could be the one in Bangkok. I've been to Bangkok. I do a lot of interviews as well. So yeah, probably. You're like, recognize your voice now.
Maybe you came up to me. We were in front of a thing, and Cindy, who just walked by, I was in a suit and I was throwing like a head kick to her in front of the thing as a picture. I don't know. Anyways, I think you interviewed me there.
I did. Now I did say earlier, I was like, I'm sure I remember. I've definitely met Roc, and I think I've seen you at a couple of probably plenty of conferences as well. And I think that is a great way as well. If you're unsure of what you're thinking about creating in the space as well, get out there and speak to all these amazing minds like yourself, Roc, like all these incredible people at the conferences. That's where you'll gain so much knowledge. So rather than going in things not really knowing your path and your framework, a lot of people out there can help you with this. So talk to them and our whole idea is that we help each other. So for you, Roc, we're going to try and wrap up at some point. What would you say to an ambitious man or woman that's starting a Web3 project? What are the key things that they should keep in mind when they are aiming to build? And really, how can they gain that special knowledge to make sure that they are taking the right path with their project?
Okay, so for me, my path was like the key things was working really, really, really hard, like day and night in the beginning at least. And even now I find myself like up until 1 a.m, many nights. But especially in the early stages, you have to grind. And I think in first world countries, people have become pretty soft. So like, don't be afraid of working 12, 14 hours a day in the beginning to make your kind of name in the industry. And then this is probably my biggest growth hack, personal growth hack in the world, is listen to podcasts or audiobooks 24/7. Like if I'm not on an interview like this, if I'm in the shower, if I am, cleaning or at the gym, or when I'm falling asleep, I have to sleep to a podcast. I can't even sleep now. I'm so used to it. When I wake up, I put a podcast on or an audio.
It's white noise for everything.
Yeah. And like, just learn. Like, so I think, when Lunar Digital Assets, which I'm the CEO of now, but I wasn't at the time, it was just being started. When the other founders came to me and said, we don't know what you're gonna do at LDA. Frankly, we don't know what we're gonna do. We just want to build a crypto company. And they said, but we need you. We want you to join. It was just because I had more knowledge than everyone around me, and because I had been spending out 10, 12, 16 hours a day studying crypto and Web3 and just learning everything about it. And so, set yourself apart from everyone else and be really hardworking. I'll give like some examples of the people that I've seen in the industry do really well. I mentioned Alexei earlier, our product lead at QuickSwap. When we hired him, he had not worked in Web3 before. He was doing a lot of like DeFi yield strategy type stuff, and he knew a lot about DeFi. And he was like a little mini whale at QuickSwap, and he asked to get on a call with me and about the direction of QuickSwap. And I got on a call with him, and he was very interesting, and we ended up hiring him, which wasn't the plan of the call, but we hired him, and he became like our number one most important person at QuickSwap, above me, one of the founders, and he's just an incredible person. I mean, damn, I don't know if I can say this. A big exchange that starts with a B tried to snipe him from us for it's like 500K a year or something. And I don't know if I should be saying that. But anyways, it's the big exchange. But it's because he just is so valuable in the industry, and we were able to convince him to stay because he wanted to be innovating and building, not working at a big exchange. Mm-hmm. But yeah, what did he do? He knew more than everyone about DeFi and studied everything about DeFi. Another person, Richard, I'll give a shout out to Richard Stanglin. He goes as writer on Twitter and things, but he just joined LDA in only about a year ago. And he's become like one of our best BD guys in just a year. And we have a big team, and he just grinds and crushes it and looks for opportunities and is very much a self-starter. I don't have to tell him to do anything. He just goes out and finds deals, and hey, this project we're incubating, I thought about this, maybe this wallet could, they could build together, or maybe, I just talked to this VC and they're interested in RWAs. Let's get them to talk to our other portfolio company. And he's just always putting deals together. And we have lots of BD people, but none of them are as hungry as him. So just be the best. I always say, you only have one life, and just, if you're going to have one life and you're writing the book that is your life right now, you're writing that book, and you only live so many years, make it a really fucking good book. I don't know if I'm allowed to cuss on here, but make it a really good book. Do last night I'm sitting, I moved to Puerto Rico. It's a really cool place from California. And last night I'm online on Duolingo practicing my Spanish, and there's this girl, Samantha, and on the leaderboard, and she has first place, and I tried to pass her. It took me an hour and a half, and then she's like passing me, and I'm passing her, and I'm like, I gotta be number one at this. I don't know Samantha. She's some random person on Duolingo. But
that's what makes you an amazing founder. I think, sometimes founders forget that what makes them so unique and incredible is that internal fire and desire to innovate, to push themselves, as you say, to learn as much as possible, to want to be the best, because any business that you create, ultimately that should be your aim, is achieving as much as you possibly can, making the best chapter that you could possibly make of your book. So yeah, I really think you've kind of nailed it there, Roc. And then just to kind of give everyone a bit of a wrap up, where can people learn a bit more about yourself, about QuickSwap, and what would be your big final takeaway? You've given us lots of them, but what would be your big final takeaway for founders out there who are working on disruptive ideas but just don't really know how to start? Okay,
so you can find me Twitter or most places as Roc Zacharias. My name's on the screen there, I think, or maybe not. ROC and then Zacharias, like in the Bible. And then, at Crypto Rocky on Twitter and other places. I want to give two little kind of shill things about QuickSwap really quick before we leave. So one is QuickSwap just became the first DEX in the world to become deflationary. I'm really proud of this. We are now burning more tokens than we are emitting in liquidity mining. It's the first DEX in the world to do this. So I'm really proud of that. Second, QuickSwap just did a community vote to invest from the community treasury in a project called StratEx, Lunar Digital Assets. Our venture studio is incubating that project. The lead on that project is the guy, Alexi, actually, that I bragged about a couple times in this space that helped invent a lot of those industry standards. And so StratEx is a DeFi strategy marketplace. It's a place where people can come think like Yearn with their DeFi strategies. But this one, think of it like the App Store or Amazon. People could take their strategies. A builder can come build a strategy and put it on our website and our project. And then those strategies, the best ones, get curated and put into aggregated into a vault. And so there might be 100 strategies for Bitcoin. Well, the top, say 10 or 20 strategies will get some allocation in the larger vault. And then the users, if they want to pick strategies, they can pick strategies. If they don't want to do that, they just put it into the vault, which is like safer. You can choose to have insurance on it. And then it gets tokenized, and the token can be traded on exchanges for people who don't want to deal with DeFi. They could buy it on whatever, their Binance or their Coinbase or their DEX. So anyways, want to kind of shill that. QuickSwap's now decided as a community to invest in that project. It'll build on top of QuickSwap and use QuickSwap and all other DeFi protocols in its strategies. So that's a cool one. And then you said, so advice to founders. I guess, so I used to play League of Legends. I used to be a gamer. Actually, that's where I got my start in digital currency, was selling digital currencies in EverQuest almost 25 years ago to Brock Pierce, who created Tether and EOS and DNA Fund, et cetera. But I was selling him platinum in EverQuest. So that when I saw the Bitcoin white paper, I was like, yeah, I get it. Digital scarcity. Where was I going with that? League of Legends. So in League of Legends, every game, there's someone on your team that says, let's surrender. Like, let's just give up. And it always drove me fucking crazy, that game. It's one of the reasons I don't really play that game anymore, is because people just gave up so easily. And it just made me think, like, this is like an average sample size. These are just random people around the world playing this. And they, like, every game someone wants to give up. And I would like try to say, like, don't give up. Come on, we got this. We could come back. And they'd be like, no, we don't. And in my head, I'd just be thinking, like, what is like your life like? You know, like, if you ever had a business, you would fail, because at the first sign of adversity, you would give up. And so that's the lesson I guess I'll say, is never fucking give up. If you are an entrepreneur and that's what you want to do in life, and you believe in yourself, then just do it. Not everyone should be entrepreneurs, but if you have that passion and that desire, I recommend it for most people. I think most people can do it. It's maybe harder naturally for some than others, but just do it. And even if you fail, get up and do it again. I've had businesses not fail, but, you know, taper off or not get the success they were looking for. And those are where I learned the most. You know, you learn way more from your mistakes. If you're the type of person who learns from your mistakes, you learn more from your mistakes than your successes. And then another tip on top of that is, even better than learning from your mistakes is learn from others' mistakes. So you don't have to make those mistakes. Like, don't get a DUI to know that a DUI sucks. I got a DUI in college and it sucked. I wish I would have listened to, like, my parents or other people around me, like, don't get a DUI, you know? The same with business. Read books, listen to smart founders like Elon Musk or like a Ray Dalio or these kind of people, and learn from their mistakes, because they've had big mistakes, right? Bridgewater, Ray Dalio's company, like, completely went almost out of business and was down to like one employee, Ray Dalio, at one point, and he rebuilt it to be one of the biggest hedge funds in the world. He learned a lot from that. He learned that he can't be so confident in the things that he believes. He believed that something was going to happen and it didn't happen, and the trade went wrong and their company imploded. And so he realized, like, know about your blinders. Like, what do I not know that I don't know? Don't be so confident in the things you think, you know? Anyways, okay. That's it.
No, that was honestly, Roc. That's, I think, incredible advice for everyone out there. I think it's the fundamentals of what we even learn so young is about making sure, watch other people, how they do things. Yeah, learn from people's mistakes. And I think if we can carry that on into what we're doing, even in Web3, I think people throw around so many words of saying that there's scam projects and people went in with bad intentions. And I do think sometimes it wasn't actually people going in with bad intentions. They were just misinformed. They didn't take the right steps to make sure, and they didn't have any framework to learn upon. They hadn't seen some of these mistakes that had been made, so they didn't really know the exact path to take. So I think now we have a bit more framework. We have a bit of history in what we're doing. There is mistakes that we can highlight and then hopefully move forward from. So yeah.
Be careful though, because there are people with bad intentions in this
There
industry,
are,
like any industry. And I think in this industry, it seems to be kind of a higher rate. I hate to say this. It really saddens me to say this, but I've realized this over time is like, there's a lot of people that are really in it just for the fast money, and will do unscrupulous things to get that money. I mean, I think a lot of when I saw, I don't want to bash like Solana, but all the gambling happening over there. And I saw so many people in the industry I knew pivot away from their like projects that were actually meaningful projects to go build, shit meme coin gamble stuff on Solana. It made me really question our industry's like integrity and the integrity of the people around me even. But that's not to say I don't like meme coins, by the way. I like meme coins. We built Dogechain, the chain of memes and dreams. And we like meme coins when they are community focused or fun or not pump and dump gambling. We don't want gambling. That's just my personal opinion.
no,
There's a market for it. But as a libertarian, I'm not saying we shouldn't get rid of it. Let people do what they want to do. And if they get burnt, they get burnt. And it's dangerous. But hey, casinos have been around for not as long as humans have been around. So, they're probably not going away.
Yeah, no, but it's making sure you're doing things that align to your ethics and how you want to operate. And I think that's another great point, is making sure you do highlight those bad actors in our space that just you don't want to work with or you don't want to listen to. But yeah, it's kind of learning how best to navigate. And I'm sure, and Roc, you really are an example of how that can be done so well, and how that can be extended into multiple businesses and just maintaining your standards of who you are and how you operate. So thank you so much for joining me for this interview, Roc. This has been Brand Talks. I hope everyone out there at home has really enjoyed this interview. I know we've been chatting forever, but there's just so much to say, and I feel like we've hardly covered anything. So yeah, thank you. A big thank you to Roc, and big thank you for everyone for watching.
Cheers. Thanks. Talk soon.